All right, folks, this is potentially something that may change the course of how the entire market and stocks like AMC could behave coming the next 6 months, 6 to 8 months. Why? Because we have news coming today that activist investor Bill Ackman is now retiring from this strategy that put him to actually go against some companies, making it public, and we'll go into the details, exactly into what it means. But let me stick for me just for a couple of minutes here because this could mean bada boom for the AMC stock short sellers, hence those like you and I holding the stock so far. All right. So news came in this morning, that billionaire Bill Ackman to abandon public battles for quiet investment approach. It may not sound interesting or relevant to AMC at first, but let's deep digger. All right. So he's an investor who founded Pershing Square, and he's known as one of the very prominent hedge fund founders or hedge fund managers on Wall Street. So he created this company, Pershing Square Capital Management, and he used to do what we call activist investing or activist short selling. All right. So what is activist investor? An activist investor is a unique form of value investing targeting companies that have significantly underperformed the peers or the overall market for a considerable period of time. Activist investor makes substantial minority investments into the common stocks of such companies. Again, may not sound really relevant, but in other words, these are people that are going against or building capital, taking stake into specific companies. And before actually doing that, they will issue a report. They will issue a report that may go in favor or against that specific companies. And once that report is out, it will create a trend in the market. And that trend could potentially work in their favor, especially if they are short selling, that company stock. And once the fire is spreading like wildfire, then they cash out. All right. So activist short seller. These are people who typically bulk up their position just before releasing the reports, but cover a chunk after making them public, because once the report is public, boom, it's out there. And then people start getting out the positions, plunging the share price of the indeed company even further down, which makes them even more money. Now, let's look exactly what is happening here with Pershing and Big Ackman changed. So Pershing Square's turning performance has come as Ackman has taken a quieter approach by focusing on companies that do not require big fixes. After exiting multi-level marketing company Herbalife in 2018 at a loss, he also abandoned short selling, betting against companies' share prices, and running public campaigns in search of a profit. We have permanently retired from this line of work, said Ackman in an annual report. Instead, Ackman has hedged his heavy exposure to stocks in recent years by placing hedges against the broader market that have made Pershing Square billions of dollars, which it has reinvested into the market. In 2020, he made bunch of millions, $70 billion in protection against credit markets. And a year ago, he also paid more than $150 million to put on about $100 billion of hedges to protect itself against rising interest rates. And in January, boom, he sold that for $1.2 billion and using the proceeds to build a stake in another company that we all know, which is Netflix. All right. Inside Big Healthman, 2.6 billion, Big Short. So these guys used to make a lot of money. All right. Making money, going against companies, going against the trend, going against what the whole public is not thinking about, and this is precisely, if you look here at what is mentioned here, one of the reasons why he decided to turn was after making a big loss onto, Herbalife. But active short sellers typically bulk up their position just before releasing their reports, but cover a chunk after making them public. This is precisely what the DOJ is going against in terms of block trades, in terms of transparency, in terms of front running. All right. I have information, or I work in collusion with research firms issuing this type of reports. All right. So the big question here is, why exactly, what if the reason behind this big move, because he's putting this out as a transformation, calling this a Pershing Square Capital Management 3.0. All right. What if the main reason behind this was, okay, it doesn't make sense anymore to have that type of strategy, especially as we move into a total unknown market conditions, or how the market will react based on the Federal Reserve increasing interest rates more than double or quadruple what the market is already pricing in, is already expecting. That's number two. And then number three, well, you might think, if this guy, which is obviously, one of the genius on Wall Street, is getting out of this type of strategy that the same short sellers in AMC stock have been using, is that not a signal to the broader market and to broader short sellers that, hey folks, if you want to still continue to make money, instead of looking for, dumping companies, why don't you look for profits? Meaning invest into companies that are going to grow. So maybe those guys are going to follow suit here and also pull back from, use it as a signal to pull back from what they've been doing here in AMC. Because again, do not get confused. What is happening in the market right now, even though it seems as it is quiet, there is still a big unknown about what the Federal Reserve is going to do, if we're going to have recession or stagflation, and all of those unknowns really is not a big thing if you are a short seller. So the bottom line is, this might be a big signal, all right? So, and if these guys are smart, I'm talking about the shorts in AMC and GameStop and these other meme stocks, they better follow suit, because otherwise it's going to be game over. It's just a matter of time. So it's kind of a make or break moment for them, but also a make or make moment for anybody holding AMC stock so far. So yeah, it may go bananas.